Hey, what's up, my awesome copiers? It's Stephen, and I'm here today to conduct my February monthly review of my performance on Etoro. First of all, I want to thank you all for your amazing support over the last couple of months, and I want to welcome all of the new copiers to my community. I really appreciate each and every one of you, and I know that you all work really hard for your money, so the trust that you put in me is very much appreciated. So, I'm going to be conducting this monthly review in two formats. First of all, it's going to be a text format which will be available on my eToro feed, which will explain the results and the individual asset performance in my portfolio. The second one is going to be a bit more in depth, and it's going to be this video. This video is going to explain a bit about my performance for the month, but also go a lot more into the strategy and areas of focus in March. Overall, I'm really pleased with the performance we achieved in February. We made over 43% profit for the month. I'm really proud of this, especially when I consider this against the other industry benchmarks, such as the S&P 500, which made about 2.6% profit for the month, and the Nasdaq, which made about 0.96% for the month. So this was really a remarkable result. But it wasn't all plain sailing. The month started off really well with a lot of optimism around a global rollout of the COVID-19 vaccination program. Also, there was continued hope that a stimulus package would be delivered to American citizens and increasing the spending. As the month drew on, we saw a lot of concerns come to the forefront. So one of the biggest concerns was that we could potentially have increased interest rates. This was a heavy burden on some of the high growth stocks, such as technology stocks, as they rely on having low interest rates and generally perform much better in those conditions. The second concern is the potential for inflation. So I've mentioned this before in many of my other videos, but in 2020, there was quite a significant increase in the monetary supply. This was given to both businesses and the general public in the form of stimulus. Although this has taken a little bit of time to come to the forefront, there is now genuine concern that this could cause inflation issues in the future. Although February was a really great month overall for our portfolio, I'm also very cognizant of the fact that I had many new copiers join me in mid-February and late February, and they could find themselves in the red on the copy. I'm very sympathetic to this fact, although I think we need to keep some perspective because we've had a really great 2021 so far, and February was very good overall as a whole. But there was market weakness in the last week of February, which affected not only the stock market, but also cryptocurrencies, which make up quite a large part of my portfolio. So I really hope that you all can exercise patience because the markets are a marathon and not a sprint. And I think that if you can show patience over the long term, that we can achieve some really great results together. So on to our top 5 performers of the month. So our number 1 best performer of the month was Wix. Wix actually had a really good earnings report this month, and they actually find themselves 41% up for the month of February. The second best performing stock in my portfolio for the month of February is Bulge Health, which is a healthcare and pharmaceutical company. It is up over 23% for the month of February. A lot of this is to do with the news that Carl Icahn, a very famous activist investor, has taken a stake, I think an 8% stake in Bulge Health, and has appointed 2 independent directors to the board of directors. This is seen as very good news because he has a reputation of increasing the value of companies and increasing the share price. The third and fourth best performing stocks in my portfolio for February were Calumet Specialty Products, which made about 21% profit in February. There is a lot of optimism that they can grow quite significantly in the future. The fourth is Corbus Pharmaceuticals, which is a niche drug maker, which made about 19% profit in February as a whole. They're making some really good inroads in terms of some of the drug trials that they're doing. There's one very significant drug trial that they're doing at the moment, which involves lupus. And there is a lot of hope that that can extract a lot of value, and I hope that can add to our portfolio in the future. The fifth best performing stock in my portfolio for the month of February was a company called Everbridge, who are up over 15% for the month. Everbridge provide critical communication and incident response for corporate companies. They're doing extremely well in this COVID-19 situation, and over the last couple of weeks have reported a really good Q4 earnings report. And there is a lot of hope that in the future that this company can grow from strength to strength and is a key part of my portfolio. February has also been a great month for crypto. We've seen a lot of increases in prices of crypto throughout the month. If we look at Bitcoin specifically, it has been very bullish. The reason why it's been very bullish is that many corporate companies have started to put Bitcoin on their balance sheet because of its scarce and finite supply, which is seen as advantageous when we compare that against bonds or gold or buying back their particular stock. So who has actually made this leap and bought Bitcoin for their balance sheet? Well, Square, for one, have just bought 118 million Bitcoin. That's in addition to the 50 million Bitcoin that they actually bought last year. Tesla was the biggest buy of the month, which was over $1.5 billion. Elon Musk had been teasing that one out throughout the month, but this really is a significant buy. The third one was MicroStrategy's. We all know that MicroStrategy's has been a big proponent of Bitcoin, but they have recently, just last week, added another $1 billion worth of Bitcoin to their balance sheet. And we could only see this trend is likely to gather pace in the future. I've also been very bullish on another cryptocurrency called Cardano, which actually makes up quite a large percentage of my portfolio. So in 2018 and 2019, during the bear market, they were working extremely hard to try and complete the key milestones that they'd set out in their roadmap. They are doing very well and making really great progress on this. And also being able to stake Cardano has actually been key to a lot of its popularity over the time. And I believe that this, although it has increased quite a lot recently, I think it has legs to move even higher. In terms of cryptocurrency, I'm still extremely bullish for many of the reasons that I've stated before. But I have a very strong strategy, and that strategy is to make sure that as the prices of crypto go up, I take some profit and I trim our positions to ensure that we mitigate the risks as much as we can, and then diversify that money into other areas. I think that this is going to be the best possible strategy moving forward. And I don't want anybody to think when I reduce these holdings that it means that I'm not bullish. I still think it has a long way to go, and we are always going to keep a core portfolio of cryptocurrencies. But I think it just makes sense to reduce the risks where we can, and to use those funds to put into other areas where we can make a good profit. I also think due to inflation concerns, we are also entering a commodity super cycle. I'm very bullish on precious metals, and I actually hold some gold, but a lot more silver in my portfolio. I think that this will rise over time, and there is lots of industrial uses for silver, and also the silver to gold ratio is also very favorable. Copper has just surpassed its all-time highs, and oil prices are also comparatively high at the moment. A lot of people's trail of thought is that as inflation continues to take a grip on the economy and the dollar weakens, that commodities are likely to go up in the future. And I think they will play a key part in my strategy moving forward in 2021. So some of you may be a little bit concerned by what happened last week in the stock market, where there was a big pullback, mainly of high growth stocks. What we're witnessing is a bit of a rotation from growth stocks, which includes the technology companies, into kind of value stocks, which were a little bit underappreciated during the COVID-19 period because of the lockdowns. So I think that's kind of a natural progression. I think also the fact that interest rates are threatening to go a little bit higher obviously has a positive effect on some companies which rely on high interest rates. But for things like growth stocks, they tend to perform better when interest rates are low. However, I don't want anybody to be alarmed about this. I still think that in 2021, that growth stocks are going to really outperform the market, and I think they're going to do very well. So I'm planning to keep a lot of my growth stocks in my portfolio, but very wisely diversify into other areas as well. So I have some value stocks. I also have some stocks which are involved in the financial services area, which should have a bit of a positive effect from this interest rate potential increase. February was the 5th month in a row where we've made significant profit, and I hope moving into March we can make that 6th. We have made a total of about 90% profit year to date, which is extremely good, and I hope the rest of 2021 can be very fruitful for us all. But I just want to make one note here. I would like you to try and be as patient with me as possible if we stumble into a few bad days in the market or even a few weeks. I have navigated a lot of these sticky periods in the past, so you please must trust me as much as you can to be able to navigate these again and come out of the other side. I understand that some of you may be experiencing some copy sync issues with your copies. Recently, Etoro have made several changes to the way that copies work and also the copy algorithm. So recently they changed the minimum copy amount from $200 to $500 and the minimum copy per trade amount from $1 to $2. Therefore, I've had to make some changes to the way that my portfolio is structured. Unfortunately, this has caused a few more issues in the copy sync. Therefore, I've reached out to Etoro to try to get as much information and guidance as possible to how I can possibly go about solving this. I know that this can be frustrating for some of you, but please bear with me while I try to connect with Etoro and get information where I can. Thank you very much for listening to this video. I hope that you found it really informative and you got a glimpse into what I'm thinking about the market. I'm also thinking about changing the format of the way that I do these monthly performance reviews. So for March, I may consider moving this to my Discord group and being able to answer questions from the community live on the video or audio function, because I think it would be a lot more interactive and I can answer the questions that you really want to hear. Thank you very much for listening. And as usual, if you have any comments, feel free to leave them below. Until then, happy trading. Thank you.